Uh-oh, the crypto collapse has reached the real financial system. Surprise, surprise, we've been discussing this reality since mid-2022, when the first big crypto domino bit the dust, Terra Luna, which triggered a contagion in the collapse of Three Arrows Capital, Voyager, Celsius, BlockFi, and eventually, a few months later, FTX. Crypto and the traditional financial system are inextricably intertwined, much like the entire global financial system. So, with the second largest crypto exchange going bust a little less than 4 months ago at this point, more dominoes are likely slated to fall. And they will until all the bad actors are shaken out. And although it's painful on price action, it's making the cryptocurrency industry stronger, more resilient, and when bad players get out, it leaves room for good players to get in the game, grow, and put us on a sustainable path for development and mass adoption. Quite a bearish week on the news front, however, Bitcoin is remaining rather resilient, only down about 3.5% over the past 7 days, Ether down 2.6%, and even with all the Binance FUD, BNB is down only 3.9% and chopping sideways. Alright, we've got a lot to cover, so let's jump back into the story about effects from the crypto crashes over the past year that are breaking through into the traditional financial sector, with one of crypto's most important banks, Silvergate, in trouble this week. Silvergate didn't start in crypto. It started in real estate. But in January 2014, the bank jumped into Bitcoin, a volatile year. Bitcoin started the year at $770 and closed above $300 in December. Some of the companies that were being formed at the time to provide services to this budding Bitcoin space, many of them were struggling to find and maintain bank accounts, said Silvergate CEO Alan Lane in a June 2022 episode of the Odd Lots podcast. So that was really where we started. The focus at the bank was institutions, other companies, some of which work with consumers. For instance, Genesis, the now bankrupt crypto lending subsidiary of DCG, was among Silvergate's early clients. The bank developed the Silvergate Exchange Network, which was a way for crypto institutions such as Coinbase, Gemini, and Kraken to transact in dollars 24/7. We've got all of them, Lane said in 2022, all of the major ones. Anybody who is serious about regulation, and unfortunately, more recently, ones that were not, like FTX. Silvergate sustained losses from the actual collapse of FTX, as well as over $8 billion of customer funds from spooked depositors. So this week, with their recent earnings filings, it's not looking like Silvergate will be able to stay afloat. In response, Coinbase, Galaxy Digital, Crypto.com, Circle, and Paxos have said they will stop using Silvergate, as did other less notable clients. Tether, the controversial stablecoin that has had its own problems with banking, helpfully popped up to remind us it was not using Silvergate. So here's the good, bad, and the ugly with the Silvergate situation we need to be mindful of as crypto investors. The good. The important thing for us to keep in mind is that at the end of the day, the market likely priced in its collapse with this 3 to 4% pullback. I mean, if we really look at how Bitcoin has handled these collapses price-wise, it's been pretty tough, only pulling back about 15% from the worst dump with FTX. The bad. For US citizens and businesses, it is getting increasingly difficult to find banking partners that will touch crypto, and most traditional banks that do touch it don't let clients transact in dollars 24/7. Access to banking that can keep up with crypto's pace is becoming rarer in the US, which will further push crypto offshore. And the ugly. Globally, Silvergate is a crucial part of the cryptocurrency market's infrastructure as a huge source of liquidity and pass-through point for cashing in and out of crypto. And although a lot of big companies that banked with Silvergate are saying that they had minimal exposure, this is a huge red flag, because that's pretty much what most of the companies that ended up collapsing said before going under, like Sam Bankman-Fried with FTX. At the end of the day, the crypto industry desperately needs banks. But both of Silvergate's competitors, Metropolitan and Signature, were pulling away from the sector even before this debacle. Metropolitan said in January that it was getting all the way out of crypto, and in December, Signature said it was going to get rid of 8 to 10 billion in digital asset-related funds. The author notes, I don't know whether Silvergate is going to come through this, but I strongly suspect it has just gotten a lot harder to exchange dollars and crypto. Silvergate dealt in liquidity, and a liquidity problem can become a solvency problem real fast. The entire crypto industry just got a lot more fragile. Yikes. Hello, I'm Crypto Casey, and welcome to another episode of Crypto This Week. Let's take a look at the global news stories and state of the current macro environment. Please check out our sponsors, Masterworks, eToro, and Ledger. Build a balanced investment portfolio by diversifying into shares of iconic works of art with Masterworks platform. Diversify into traditional stock market and ETFs with zero commissions using eToro Exchange. And make sure you're taking complete control and ownership over all of your digital assets and cryptocurrencies by using secure cold storage hardware wallets like Ledger devices. Be sure to scroll down and use the links below to access the correct and official sites, as well as redeem any special offers they have for us. Sweet. So even though Silvergate's likely demise wasn't directly a result of regulators going after them, there is an orchestrated effort in the US among regulators to make it extremely difficult for US citizens and businesses to access crypto on and off ramps with the US, and it's been named Operation Choke Point 2.0. US crackdown seeks to push crypto back to the fringes of finance. Major firms now face challenges securing bank relationships. Industry reeling after watchdogs' public and private actions. The regulators are effectively building a wall between crypto trading and the banking and the securities markets to prevent the types of systemic vulnerabilities that led to the 2008 financial crisis, said Todd Baker, senior fellow at Columbia University's Richmond Center for Business, Law, and Public Policy. U.S. officials say they're working together on crypto and deny that there's some broad effort to crush it. They say responsible innovation that plays by the rules is fully supported. Regulators understand they can't fully deplatform crypto, but they can certainly try to wall it off and minimize any risks, said Nick Carter, general partner at Castle Island Ventures. I've talked to banking executives and crypto CEOs, and they are telling me there's a highly coordinated move underway to try to ring-fence crypto to cut it off from traditional finance, said Carter, who called the moves Operation Choke Point 2.0 in a recent essay. Nice. So as we discussed together in a previous video, the US regulating crypto to death would not be the death of crypto. Rather, it would be the death of the US as the global financial and technological leader, because it would prevent US citizens and businesses from participating fully in the crypto industry. And this will just cause crypto to grow and develop offshore. As we've also been discussing for the past year now, more and more countries are choosing not to use the US dollar. And the US cracking down on stablecoins and preventing US banks from dealing with crypto will just cause everyone to use other alternatives to the US dollar, destroying its status as the world's reserve currency. And what's funny and rather embarrassing is what the US Treasury thinks will help prevent this. US explores central bank digital currency to preserve dollar's reserve status. LOL, no, absolutely not. No country wants to use a central bank digital currency controlled, monitored, and operated by the United States. If the US government actually wanted to maintain its status as the world's reserve currency, they would not prevent countries from using the national banking system like SWIFT via sanctions. They would not prevent the use of US dollar-pegged stablecoins, and would rather support and promote their proliferation around the world. And they would stop raising interest rates, which have been wreaking havoc on other countries around the world because the cost of borrowing US dollars is completely out of hand now. A central bank digital currency issued by the US would do the opposite of all of that. It would give the US complete control over all the money, regardless of which country is using it, allowing them to program the currency to impose whatever restrictions they want. And unlike with stablecoins that give almost everyone around the world access to transact in US dollars, a CBDC would decrease the amount of people and entities able to access the currency, making it less popular. And another thing the US Treasury fails to understand is basic business sense. Because with their central bank digital currency, they are looking to issue currency from the Federal Reserve directly to people and businesses, effectively cutting out the banks. But the banks and their bought and paid for political puppets would fight against this. So at the end of the day, I think the US will have a hard time rolling out a CBDC that is widely adopted anytime soon. But in the meantime, we should be doing our best to spread awareness of the implications of a CBDC enforced on US citizens in the US, which you can learn more about in this video by clicking on the link above. Another thing to consider is if the Federal Reserve is competent enough to even create, much less successfully launch, a central bank digital currency. Let's check out some funny and embarrassing news about the Fed and their technological skills, or rather lack thereof. This week, a Federal Reserve virtual event canceled after porn Zoom bomb. An event that was set to take place with Federal Reserve Governor Christopher Waller on Thursday was canceled following a pornographic Zoom bombing incident. Waller was set to speak at the virtual event with the Mid-Sized Bank Coalition of America, an organization that advocates and serves as a resource for mid-sized banks, about the economic outlook going forward. A Reuters reporter who was on the call for the event told the outlet that a participant with their name listed as Dan began showing graphic pornographic images on the screen a few minutes before the event was to start. Reuters reported that as many as 220 people were on the call before it was ended, and the organizer did not automatically mute microphones and shut off video for participants when they joined. A Fed spokesperson told The Hill that technical difficulties with the event caused it to be canceled, but Waller's prepared remarks were posted on the Fed's website. Ladies and gentlemen, this is the US Federal Reserve in all of its infinite wisdom and glory. This is literally the entity pretty much running the whole world right now in their efforts to create and successfully launch a central bank digital currency. All I have to say is, Godspeed. Tune in this week as Fed Chair Powell to testify at House Financial Services Committee March 8th at 10 a.m. Eastern Standard for the central bank's semi-annual monetary policy report. Cool. Let's go over some of the coordinated attacks from the SEC against crypto this week, check out an update on the Ripple case, dispel some crypto FUD, or fear, uncertainty, and doubt from the week, and wrap up with what I believe to be the one potential red flag that could cause Bitcoin to drop back down to 10K levels. Before diving in, let's take a moment to learn about the importance and benefits of setting up a completely new, free, separate email account using a handle we've never used anywhere else before with encrypted email services provided by Proton to use exclusively for managing accounts associated with our crypto investments. Proton's encrypted email services prioritize privacy and security, which will protect you from potential scammers or hackers from 1, breaching your account, and 2, if they are able to reset the password, all previous emails are encrypted, meaning they would not be able to see them. Because hackers will try to access email accounts to see what other financial services you use in order to try to target those and steal funds as well. Proton uses open source, independently audited, end-to-end encryption and zero-access encryption to secure all of the information and data in your emails. And a free email account with Proton keeps all of your communication and conversations private. So if you decide to create a new email address, I highly suggest checking out Proton. And they also offer services to protect our core account privacy with file storage, calendar, and VPN options. So be sure to scroll down and use the link below to access the correct and official site, as well as redeem any special offers they have for us. Sweet. Back to crypto action at the SEC. This week, SEC Chair issues dire warning for crypto exchanges. Gary Gensler remarks that just because a crypto trading platform claims to be a qualified custodian doesn't mean that it is. When these platforms fail, something we've seen time and again, investors' assets often have become property of the failed company, leaving investors in line at the bankruptcy court. For Gensler, advisors should comply with the current custody rule, which requires that investors' funds and securities be held with qualified custodians. These qualified custodians, which Gensler identifies, are money managers on behalf of their clients regulated by the SEC under the US Investment Advisors Act of 1940. So yeah, basically just another facet of Operation Choke Point 2.0. As well as these remarks this week, Binance.US is operating unregistered securities exchange, SEC official says. The officials spoke during a Voyager digital bankruptcy hearing. Speaking of which, Voyager's bankruptcy token needs regulation, SEC lawyer says. Company seeks to mint crypto to repay creditors in bankruptcy. Voyager's payout plan could be threatened by any SEC action. Way to protect retail investors by thwarting a payout plan. But the SEC's absurdity is not going unnoticed by the US legal system, as Voyager bankruptcy judge says he is absolutely shocked by SEC objection to Binance.US deal. Judge Michael Wiles gave short shrift to idea that FGX token could be unregistered security. U.S. Bankruptcy Court Judge Michael Wiles appeared heavily skeptical about an attempt by the Securities and Exchange Commission, SEC, to stop a purchase by Binance.US of assets of defunct crypto lender Voyager Digital at a Thursday court hearing. The securities regulator said the $1.02 billion deal should be blocked because Voyager's token could constitute as an unregistered security. You come here and tell me that I should stop everybody in their tracks because you might have an issue, Wiles said, addressing counsel for the SEC. It's kind of a weird objection. Wiles, who is with the Southern District Bankruptcy Court in New York, said he was absolutely shocked at the SEC's objection, saying it was asking Voyager to prove a negative with little guidance from the regulator. And legislators aren't exactly pleased with the SEC's actions against crypto either. Congressional Republicans aren't happy with an SEC effort to rein in crypto platforms. U.S. lawmakers say SEC directive may bring greater risk of loss. Senator Cynthia Lummis and Representative Patrick McHenry cite the Celsius bankruptcy in refuting an April 2022 bulletin. So some bullish pushback against the SEC's Operation Choke Point 2.0 from legislators and the court. And this week, we have a bit of a bullish update regarding the SEC's case against Ripple, which will be extremely important in determining the SEC's future course of action, depending on the outcome. Ripple says recent Supreme Court ruling weighs in its favor in SEC case. The ruling has been seen by some legal experts as a positive development for Ripple's case, as it could limit the SEC's ability to seek monetary penalties against the company. However, it remains to be seen how the court will ultimately rule in the case. And Ripple and the SEC are still in the midst of discovery and pretrial proceedings. Nice. As crypto investors, regardless of how you feel about Ripple's project, we should all be rooting for them, as a lose against the SEC would greatly increase the likelihood of a major crypto crackdown in the United States. So keep a close eye on the development of this case. Sweet. Let's wrap things up with two scenarios that would be bearish for crypto and potentially send Bitcoin back down to 10K levels. 1. If Binance, the world's largest cryptocurrency exchange, went bust, which a lot of FUD has been spreading around recently in the news. This week, Binance can't keep its story straight on misplaced $1.8 billion of USDC. A new and detailed investigation by Forbes has raised significant questions about the management and custody of customer assets and stablecoin collateral by Binance. There are many possible explanations for the nature and intent of certain on-chain transactions highlighted by Forbes, and they could be entirely innocuous. But Binance's so far confused and sometimes contradictory responses to the findings do not inspire confidence, particularly in a post-FTX era of rightfully widespread suspicion of centralized custodians with off-chain balance sheets. Bearish if true. We shall see though. In the meantime, always make sure you are transferring your crypto off of exchanges to hold in your own cold storage hardware wallets like Ledger Devices or BC Vaults. So scroll down to access the correct and official sites, as well as redeem any special offers they have for us. Cool. And 2, a much worse case in my opinion for crypto, if Tether, the world's largest stablecoin, went bust, which more FUD has been spreading around recently in the news as well. Stablecoin issuer Tether used bank accounts opened with falsified documents in the past. Tether, the company behind the world's largest stablecoin, accessed bank accounts by way of falsified documents and intermediaries, a new report says. For several years, there has been lingering Tether FUD with regard to whether or not they have sufficient reserves for all of the stablecoins they have issued. As of late, there is more uncertainty about them choosing not to disclose which banking partners they use, which begs the question of whether or not they are sufficiently collateralized, or if they are trying to avoid their banks being targeted by regulators, forcing them to find another banking partner, which, as we've discussed in this video, is becoming more and more difficult to come by. And maybe it's a little column A, a little column B with Tether. Either way, a Tether bust would easily send Bitcoin to lower lows. As crypto investors, we must always be prepared for anything in these crazy times. Awesome. If you would like to learn more about the implications of a US central bank digital currency and why it's important to spread awareness about it, check out this video. If you would like to have that eureka moment and finally understand how wallet phrases, private keys, and public addresses work, check out this video. And use this link on the screen here to secure your free, brand new encrypted Proton email account. Like and subscribe for more. Be safe out there.